episode of Bullish Banter, and we are joined by a very special guest. So I hope to those who will be listening to this session, you might learn one or two things about investing and definitely make the most out of your, be it aligning your portfolio. Of course, I normally moderate and ask a lot of questions, so I hope they will not be so difficult.
Right. Hi guys, Rufus Kamau here, markets analyst at FX Pesa. So today we'll be having a very important conversation. We just had a successful first half of the year. One of the biggest records we have seen is that the Nasdaq made the biggest gain for the first half of the year on record. So we will be talking more about these, and next I would like to introduce our guest. Hi Ali, welcome to the podcast.
Thank you for having me. My name is Aly-Khan Satchu. I look at financial markets, and I am a geoeconomic analyst and the CEO of Rich Management.
Awesome. Thank you, and welcome to the podcast. Hey, Jesse.
Thank you.
Yeah, I'm good. Straight to it. Maybe in the first half of the year, Ali, I know we have noticed a lot of geopolitical events from Wagner Group to China, US opening and closing their diplomatic ties, to significant cut in oil production. Perhaps as an investment analyst, how has your portfolio and obviously your investment philosophy been throughout the H1 of the year?
So that's a really interesting question. I think, we have not faced such a complex geopolitical world for many decades.
Yes.
That complexity obviously was increased with the Russian invasion of Ukraine. We have a very adversarial approach between the three great powers, that's the US, China, and Russia. This has spilled over into the financial market quite considerably. And I think, we saw that huge move in commodities last year.
Yeah.
Some of that has come off quite dramatically. So investors have to be very, very nimble in the current environment. My philosophy has been not to be stuck to any particular theme, to remain as nimble as possible, and to look at opportunities as they present themselves.
Interesting you say opportunities. We have been listening to some of the hedge fund managers, and they have been maybe turning their strategy from, let's say, being a long-only investor to being an event-driven investor. And one of the major events that has been causing a lot of, alteration of decisions in investing has been the federal rate and the central bank decisions and policy changes. Perhaps has that played a part in how you position your investments?
Absolutely. I think, the Fed funds rate is still the most important single interest rate across the globe. It impacts just about every investment asset class you can think of. And a lot of the uncertainty this year was driven by the fact that people were in two minds. I remember a time early in the year when 2-year yields in the US dropped below 4%. Everyone was expecting rate cuts at the end of this year. My overall thinking is as follows, and has been as follows, is that the Fed is not going to cut aggressively, that they are still on an upward path, that they will hold interest rates above 5% for the next 24 months. And there is a risk of inflation starting to climb again early next year, which will put further pressure on the Fed. So I think the market is a little bit too optimistic about US interest rates, and that in part has fed some of this rally that you were alluding to at the beginning of the podcast.
Yeah.
Yeah, I saw a report from Lynn Alden basically saying that while the Fed is tightening on one side, the fiscal budget is continuously expanding, and this is serving as a form of stimulus in the US economy, which is currently leading to the current outcome, where on one side you are seeing a very strong dollar, but of course the stock market is continuing to rally. What do you think about the expanding fiscal budget in the US?
I fundamentally think it's out of control. And I think, we had that funny theater of the debt ceiling a few weeks ago.
Yeah.
But the bottom line is, I think, from a fiscal point of view, the U.S. has lost all discipline. And it's just unprecedented in my lifetime. So absolutely, I agree with the point that on one side, you've got the Fed trying to tighten policy. On the other side, you've got a government that believes, money can be printed and is an endless source. So I think it's a very big challenge for monetary policy makers in the U.S. Mm-hmm. And I think, look, they're kicking the can down the road, but they're running out of road. When they will run out of road is a very difficult thing to predict. Yeah. But the trajectory of this is not in a good place. I think they've increased borrowing by nearly $1 trillion already after that debt standoff. So yes, I agree with your point. This problem is not unique to the US. Mm-hmm. This is a problem we're seeing in Europe. It's a problem we're seeing in many of the G7 economies. Okay. And I think it's the Achilles heel of these economies.
Yeah, I remember the Inflation Reduction Act basically passed even more fiscal spending.
Absolutely. I mean, these numbers, it's like Disneyland economics. I simply cannot comprehend how they could get away with it politically. And seemingly, I just don't know how long it's going to last. But it feels like a dream. And at some point, the dream becomes a nightmare.
Yeah, very true. On to that, and in addition to that, and also there has been an interesting debate we have been having here with the Rufus about, of course, the fiscal discipline of US is causing some jitters in the markets. But now the BRICS are sort of, suggesting a new method of settling their transaction. But yesterday, the Reserve Bank of South Africa governor mentioned that there has to be some technocratic policies to address and formulate to, get that de-dollarization active. What is your view on the debate, on the brewing debate on that side?
So that's a very interesting debate. I picked up on it overnight. I think, firstly, just my overall macro view is that we are going to see a BRICS currency, that we're increasingly going to see, people looking for safety valves when it comes to the dollar. I think, the freezing of Russia's reserves of $300 billion basically put the world on notice. Okay. Lots of people started to think, oh, goodness, if I fall out of favor with the US, this is going to happen to us. Every risk manager at a country level started to look at ways that they could insulate themselves from that problem. So I think that was a massive impetus. Okay. I think with respect to the comments that came out of the South African Reserve Bank overnight, what he was saying was a fact. I mean, it's very difficult to synchronize 5 countries, let alone 54 countries on our continent in terms of fiscal, in terms of monetary policy. But I think what he was missing was the fact that we don't have to have a single African currency which meets all those criteria. We could have a currency which is a trade-related currency. So in that instance, which is I think what the Chinese are doing with the yuan, is they're trying to make more trade transactions in the yuan. I think we can do the same with an African currency and have it transact more of our intra-African trade in our own currency. And I think then you avoid all these challenges about interest rates, fiscal policies, issues that have, of course, bedeviled the European Union and the euro, because, different economies move at different speeds and have different policies. So I think what was missing in that debate yesterday was the fact that you can have like an interim measure, which is a trade facilitation currency as opposed to a single currency.
Yeah. Do you think the Afri-Exim Bank is the institution to do that?
It's interesting because they've been at the forefront of a lot of these Pan-African initiatives and have, I think, quite a deep knowledge base and a strong bench. So I think we need somebody who is more technocratic, and I think for now, Afreximbank definitely are in the lead. I'm surprised that the likes of the African Development Bank didn't take a stronger position on this.
True.
But I think the Afreximbank is running with this quite aggressively.
Yeah. The last time I heard the Kenyan president Ruto talk about it, he basically mentioned that like the biggest challenge with the Afreximbank is that the major financiers are not African countries, so they don't have the full control.
That's a very valid point. I think, as we seek greater sovereignty at a national level and a Pan-African level, it becomes very important that we create ownership of the institutions who are going to lead that Pan-African development. So I think his point is a fair point. And I think it's particularly important given our history, which is of a sort of semi-detached colonial control in many cases. So I think his point is valid, and I think we should look to have greater ownership in our own Pan-African institutions. It's not rocket science.
Yeah, definitely.
Agree.
In the second half of the year, I know we are, like you mentioned, the Fed hike is coming. I'd like to pick your brain. You have seen the continuation or the extension of cuts in production within the oil-producing countries. Is that something that you think will affect the rate of inflation, as also the strength of the various currencies, be it US dollar, Canadian dollar, and the rest?
It's a very interesting question and a complicated one. So let me start with basics.
Yeah.
What we saw in the last 12 months or since the Ukraine war started was inorganic price movement in the oil market to the downside. What do I mean by that? I mean that the US basically cascaded the derivatives market with supply of contracts in order to keep a lid on the price. And this is, it was evident to me, when we saw price surges around up above 125 and dramatic price falls. And I believe that it was the US government through whoever, maybe the Federal Reserve, who were basically keeping a lid on the oil price. Otherwise, I think it would have gone considerably higher. Now, we are in a situation where they've emptied their SPR in the US, and I think clearly the oil suppliers, Saudi Arabia, Russia, amongst others, have drawn a line in the sand. If you've noticed, for 5 or 6 times this year, the oil price has rebounded, or there's been an announcement whenever the WTI has come close to $65, $66, $67, they've come out with some kind of announcement. And to me, that is their line in the sand. Overall, I feel that the oil price is currently underpriced in relation to its actual equilibrium price. And I think that price is so. I see the oil prices having the upside impetus. But I am cognizant of the fact that, you have a rogue player in the markets, that's the US, and that they are determined to keep that price low. And the easiest way to wag the dog is to use the derivatives market tail to do that. And they've been doing it.
Interesting. Maybe your closing remarks and obviously piece of advice to investors and, of course, something like that, financial.
Yeah, my word of advice is one's got to be nimble. One's got to not get stuck to any one theme. This first half was all about AI. If you strip out AI out of the US markets, they were down by a little bit. So you've got to keep yourself, on top of things, aware of what's happening. But there are so many opportunities wherever I look. I mean, whether it's the commodity market, FX, or equities, where, of course, you can make much more money because of the leverage effect. I would just say stay nimble and good luck to everybody.
Thank you very much for that. Maybe Rufus?
For me, I don't have much. I think the AI wave has really gone past logical in terms of valuations. If you look at NVIDIA and other AI stocks, I think those valuations may not continue towards the end of the year. So we could be seeing some form of pullback.
Okay. It has been a pleasure speaking with you, Ali. I hope we can have you here again, maybe sometime in the year as the markets continue to give us interesting features and prices.
Thank you for having me.
All right. Have yourself a wonderful day. Whoever has questions, feel free to, of course, add on to when the episode goes out, and we'll be glad to cover it in the next session. Cheers.
Thank you.
Thank you, Ali.